All right, so we got SPY approaching that upper resistance again. Can it bust through? So if we bust through, that'll be 408, 89, 90-ish. So we on our way to like 409. All right. So if we break 409, then to 410. So what you would do is once it breaks out, you would wait for it to get over that 409.20, and then you get in to ride it to 410.50-ish. And then to the downside, if it breaks that looks like 408 even is where it needs to break. If it breaks to 408 or 408.50, then we're probably going to 405, so you could ride it down to that level. So now you have a trading plan on the spot. If it breaks out, I'm going to 410. If it breaks down, I'm going to 405. And that's how you play it. But remember, we don't want it to just break out with a unclosed candle and then we get in, because you'll have it do what like this wick is doing now. It could pop up and out and then retrace back and close under and then start going back down again. You have to actually wait for it to close outside of this line. And if you're still kind of iffy, like you don't feel it, you could wait for maybe a second candle to close outside of the line to give you kind of a confirmation. But once you're in the trade, you really can't close it until it breaks down here, right? Or in this case, let's say it breaks out, you would set your stop loss at the bottom of this candle that's working right now, because then that would be a reversal. All right, so it's pushing out. Will it stay out? We got about 2 minutes till this candle closes. All right, looks like it's breaking out based on the numbers. So we're getting a breakout. New candle in about 4 seconds. Let me zoom in some. So it did close out. So now we want to see what this next candle does. Like for me, that's not enough. Like it barely closed out. So now I would be looking to get in because this looks pretty bullish. So boom, take the trade. Stop loss is if it breaks below this last candle. And where we going? 410. That's our target. Or whenever you like the profit you see before 410. If you like it at 409.50, you can sell. 409.60, you don't have to wait to the level because sometimes it don't get there for whatever reason. And I like to set my targets within a range. That's just give me more comfort. So now you chill. So at that 410.50, if it break over that, then we're looking for 411. All right, here's the high today. Look like it's trying to take that out. Will it do it? Will it do it? 409.69 is the high. Yeah, it took it out. Actually, it's 71. That was this morning. Yeah, after pre-market hit 409.71. So that's what we're looking to break for a new high today. Ooh, look at that. See, that kind of stuff be scary, don't it? That's the market. But you already know your stop loss is down here. Like it's okay if you take the little small losses, because that just means the trade wasn't ready yet. That's all. Or it was a fake breakout, but you didn't lose much. If you took the trade when it broke out, you're most likely in profit right now. You're probably seeing it fluctuate, between a percentage level based on the contract you bought. I think we had some data drop. That's why you got all these crazy volatility right now. ISM manufacturing is slightly lower than expected. All right. Let's see if the market wants to retreat off of that. All right, here you had to close it. If it closes, yeah, you got to close that trade. Market don't like that news. So if you in calls, whoo, yeah, you got to close it. Even if you still right, you got to wait because there's some new volatility been injected, and you don't want to be caught in that. If you didn't sell in time, just hold it out, wait, see if it actually breaks down and goes through. If you did sell, well, you could sit back and again wait and see what it does. So let's go back to our bulls. We got in the trade. Data came out, moved back against us. We'll see where the candle actually closes in about 2 minutes. But if you got in the trade, got out at 410, you did it because it topped out right at 410 before it pulled back. But this is like clear as day falling. So like something like this, because we can't wait 48 minutes for this candle to close, we will miss the trade. Drop to your 5 minute. All right, we got to close under there. I would say it's safe to go short now. So now in this scenario, if going short, your stop loss is always where it broke down from. So this would be your stop loss. If it were to break, actually the high of the market, excuse me. Yeah, I don't want to tell you wrong because what'll happen is you'll have it go down like it's doing. Then it'll take a breather and come back up here, right? And then it'll resume going back down. So now we broke down. Let's look at the levels on the downside. So if we lose 408.50, watch out for 405.37. So now you have it. So you can say I'm gonna set my target to 405.37 or somewhere in between. And this is another thing why, another good reason why you can risk, that small amount of your account. Because let's say you took the call and you didn't sell at 10, you took a small loss. Well, then you saw it break to the downside, you take that trade, and now this is where you should be able to make it up. Yeah, there's no data to drop to interrupt this trade, so this is what we should be doing. So we got down to 405.09, and the level was 405.37.